Alright guys, welcome back to the channel. Where to begin? Well, I am profitable for the week, but I did have a close call on one spread that I'll go over. I think as of Wednesday, I was up $90 or $95. I'll have to go back and see the video. I think it was about 95 bucks. Yeah, because I had exited out that SPY call credit, and then I exited out that 4 option order. I have everything written down because I did trade more than I wanted to. I got in and out of too many positions. I had about 1, 2, 3, 4, 5. I had 7 different positions this week. And out of those 7 positions, I only had 1 day trade. So as you can see, here's my account as of now, a little over 6,400. My buying power's a little over 3,800. Everything's closed out. The only thing I'm holding is $100 worth of Bitcoin that I paid at the top at 40,000 average. I'm down $7 on that. I'm holding my Norwegian shares, which are currently down a little bit, but not down from my average, but down from $28. So that means that my covered call I'm holding, that expires next month, is up. So I'm just hanging on to that. Other than that, I'm not in any other positions. Everything's closed out. I did have a close call, which I could have lost a lot of money, but I took the right action on that, and I'll go over all my trades. Let me just go over how I'm doing for the month. It all looks weird, I think because of the cryptocurrency. But here's the last 3 months. I'm up in the last 3 months over 100% in my account. 3,000. It just, man, the options spreads just really helped my account grow. Okay, account wise, I do have 1 day trade on Gamestop, and I'm not too sure how this works with options, spreads, and expiration, but I would have thought that if you opened a spread on Friday and it expired Friday, and you let it expire, then that's technically, depending which way you go, a credit or a debit, that's a buy and a sell or a sell and a buy. So wouldn't that count as 1 day trade? Because I did do that. I'll go over the spread. And I thought it would have been here, but it's not in here unless it's going to update Monday and say that it counted as 1 day trade, unless it just didn't update yet. But I don't know, I'm kind of curious about that. Let's go over all my moves for the week. A lot of put out there and canceled orders to open and close positions. That it's just stuff I didn't get filled on, so I just canceled. But I'll just go through all the important stuff. I could probably go from Wednesday on, because I'm already up to date. Yeah, from the 11th, I already went over the SPY call credit that I sold for 105 and I bought back for 15. I made 90 on that, and I went over the 4 option order in my last video. I made 5 on that. Remember, I bought for 25, right, and I sold for 20. I'm sorry. These are credit spreads. I sold for 25 and bought back for 20, so I kept the difference, $5. And then the only other thing I went over, which wasn't expired yet, was that Amazon call credit spread, which I sold for 2 contracts for 80 apiece for 160, and I said I was just going to let it expire on Friday, and I did let it expire. Remember, call credit is bearish, so you take your lower strike, and as long as the underlying price of the stock stays above your lower strike, 3,290 by expiration, then you get your collateral back, which in this case was 2 contracts at $10 or $1,000 a piece, was $2,000. So let me go over that really quick. Amazon. So Amazon ended up trending down all week on the daily. I could delete that if it will let me. Never mind, don't worry about that. Alright, 1, 2, 3, 4, 5. So I bought this on Monday, beginning of the day, so around 31.50. Remember, 32.90 was my lower strike. So right there, we actually closed on Friday at around 3100. So it was like $190 away. So that expired worthless, both contracts. So I kept the credit because remember, I'm selling a spread, so they want the price of spread to go up so they could be profitable, whoever bought it from me. I want the price to go down. I had theta in my favor because as you're getting closer to expiration, no matter what, if the price stayed at 31.50 all week, 5 days straight, I still have time in my favor, or time decay. So no matter what, even if it went up, I would still make money. Even if it went up, theta would still be in my favor and I would still make the $160. Even if it expired at 32.50, 32.70. So that ended up being a winning trade for $160. So I was up. So I'm up 160 on that, plus 90 plus 5. So as of right now, 255. Then Monday, let's see. Then I didn't do anything until Wednesday. Because I had collateral from closing those contracts on Monday, the 386, 387 call credit, I had collateral left. So on Wednesday, I opened, let's see. So come Wednesday, I opened this right here. Another SPY call credit for Friday expiration, not for the Wednesday expiration. And I actually went over opening this trade in my last video. If you guys remember, I went over opening this trade. And on Thursday, I closed this trade. Because it's a call credit, so I need the prices of the SPY to stay under 385. So on Thursday, I ended up buying this this 17 contracts of this spread back for 119. Alright, this never usually does this. Alright, so here's Friday. And here's Thursday. So, the price made it over 380. I was starting to get a little nervous. So I threw an order out there to buy all 17 contracts back for 7 cents. Remember, I sold them for 8 cents a piece. So I sold them for 8 cents a piece times 17. So I collected $136. Then I threw an order out there to buy them at 7 cents each at $10.25. And I got filled. $10.15, $10.25. It was just getting me nervous because the price was going above $3.81 at that point. So I did get filled at 7 cents. So I paid $1.19 for them. And I collected $1.36. So the profit was $17. So I made $17 off of that. So then I had some collateral free because that wasn't a day trade. Remember, I bought the day before and the day after. So then I decided to open... Oh, here we go. Gamestop. Gamestop had ripped up pre-market on Thursday. This is my day trade. So this is a call debit. So I had bought one contract. It was a 38.39 call debit. I paid $30 for. And I bought this at $9.35 on Thursday. So GameStop. So here's Thursday. Yeah, because we had this big run up from 32 all the way to 39. Then the market opened. At 9:35 I placed an order, a call debit. The price was at like 37. It was a 38 by 39 call debit spread expiring on Friday. Cost me $30. I would need the price to be above $39 by Friday. And the price started to sell off. So I just threw an order out there to sell it for $35. And I actually got filled. Let's see when I bought this and when I sold this. So I bought this at $9.35 and I sold it at $9.38 just 3 minutes later for $5 profit. But I think the price was lower. Let's see, $9.35. Yeah, so I bought on this candle and then $9.38. Oh, maybe I bought down here on this candle. But anyways, I ended up getting filled a couple minutes later. This trade was making me nervous. This stock was so volatile when it opened. I decided that I really didn't want to be in it. So the most I could have lost was what I paid for the contract, $30. But if I did hold off and let it expire, I would not have made my money. I would have lost full profit on that, which would have been $100. So I made a quick scalp. That was my day trade. So I made $5 on that. Damn, I took way too many trades. I gotta calm down. Next week I have to reevaluate. I was just, as soon as I was getting my collateral freed, I would just jump right into something else. Went through that. So this is the close call. So I had some collateral free, and then AMD, I ended up buying 17 contracts, a put credit spread. So this is a bearish move. 87.50 by 88.50. So I need the price to stay above 88.50 by Friday. I ended up getting filled January 14th, which was Thursday. So I bought these at Thursday, $1,700 collateral, because it's $1 difference times 17 contracts. And I collected $153 credit up front. Now let me show you guys this trade. This was Thursday at 10:30. I got into this AMD. And this didn't really look like it moved much on the daily. That's why I got into this. That's why I wasn't really too nervous about getting into this trade. What time did I say I got into this? 10:30. So right around 10:30, the price was right around $91. So I had put a, let's see, 8750 by 8850. So I had a little bit of room to work with. So 91 to 8850 is $1.50. So I had one day to let this thing expire above 8850. So here's where I got nervous. Friday morning opens, right? And this thing just freaking sells off below my strike price. If I let this thing expire under 88.50, I would lose $1,700 collateral, but then I would keep the $150 credit. So you're talking like over $1,500 loss. So I got nervous, but this thing ended up bouncing. I was down like negative $500 or $600 at this point. And I was willing to get out and take a $500 loss, because with the other profit I had going on this week, it wouldn't have been a big loss, but it would have been my first like real good loss, minus that Amazon one I lost $100 and something on last week. So the price ends up going back up, and I end up I threw so many orders out there. I was up and down with what I wanted to get filled with, and at one point I was like plus $34. So at 12:16 I threw a order to buy for 136, quarter after 12 on Friday. So 12:15, the price was right here. It was moving back up, 86 or a little over $89, so almost $1 over my strike, but I just didn't trust it. So I threw out an order to get filled at 136, and if this didn't fill me, then I was gonna throw out an order for 153, which would have been break even, because that's why I collected. I was going to throw out an order to buy. If this didn't get filled at 153, I would have got filled there and I would have just broke even and walked away. But I ended up getting filled at 136. So I did make $17 profit, because I bought this back for 136. Right here, as you can see, closed. It's a credit, so I had to buy it back. But when I sold it for 153, so I made $17 on this. Plus 17, it's 294. And thank God I got out of this thing, because it did end up running back down and closing right here underneath my strike. Right about 88.10, 88.15. I would have needed to close up here, at least 88.50. Not even close. I would have lost $1,700. So that was a close call. I'm not going to mess with AMD anymore, because apparently it runs more than I thought. So that's it for that one. So that had me on the tip of my toes for the first time, because I was just so close to the strike price. But that's how I was getting a good fill and getting a good credit, was because I was close to the strike price. With only 1 day left expiration, your strikes really aren't going to be that great. So I took one more trade on Friday, and that was right here. So now I ended up getting into a Tesla call credit, 3 contracts, $5 spread, so that's going to be 500 times 3, so $1,500 collateral, and I collected $72 at 12:30. So look at the strikes I got. 860 by 865 call credit, so bearish. So let's go to chart. Tesla Friday, 860 by 865. So my lower strike is 860. So right below high a day. Around 12:30 I opened this. Right here. Price is about 837. So I had a couple hours for Tesla to stay underneath 860. Now anything could happen, don't get me wrong. Tesla could have ripped up in 3 hours to 900. But because we're on a really strong downtrend, I had good faith in it, and I was ready to take a loss, not a max loss, but I would have gotten out before that if it was really heading up towards this way. I don't think I would let it expire close, because you can go an hour and after hours before the price finalizes on options. You have to remember that. It doesn't close out here. It closes out, I don't know, 5:30 I think. So anyways, the price did start to go back up on me, and we had a bounce off VWAP to 845. Was I getting a little nervous? Yeah, because this was 2 o'clock at this point, still 2 hours. But then we had a sharp drop, and we ended up expiring right around 820 something. I let this expire, and I collected the max profit on that. And as you can see, oh, why are those not even up here? Oh, here they are. I don't know why they're down here. So here's a Tesla. As you can see, 0. They both expire worthless. And here's the Amazon. They both expire worthless. So I collected my collateral back, and I kept on the Tesla was $72. And that's it for my week. I'm sorry this video is really long. Plus 72, so 366. So 366 for the week. Next week I'm going to go in a little more clear-headed, not do as many trades. I did overtrade this week, but I only have 1 day trade on the books for 7 trades. And that's how you get around day trading. So up 366 for the week. So far, since I've been doing spreads, so I've been doing spreads like this type of trading exactly 1 month, because I started the week of December 14th. So for 1 month, 1 complete month, I am up 366 this week. Plus 370 last week. So this is over 5 weeks. I'm sorry, from December. So this is going to be over 5 weeks. Plus 518. Plus 337. Plus 612. That's what I made the first week. So I'm like $2,200 profit over the past 5 weeks off spreads. And as you can see here, it's pretty close. $2,000. That's 4 weeks. Up $2,000. So that's going to be it for the video. Stay tuned. Thank you guys for 900 subscribers. I'm pretty close to 1,000. So If you're watching the videos and you aren't subscribed, hit the subscribe button, hit the like button. If you have any questions or anything you guys want me to go over in terms of this kind of spreads, I'm pretty good with it now. I'm pretty sure I could answer some questions. If you guys have anything, just leave them down below in the comment section. And that's going to be it. Hope you guys are having a good weekend. I'll see you on Monday.